Everyone thought Intel was dead. For years, the headlines were an obituary, losing to AMD, Apple ditches Intel, foundry failures. But in the last few months of 2025, something shifted. NVIDIA, the king of AI, just completed a multi-billion-dollar stake in the company they were supposed to destroy. As a finance professional, I've seen corporate bailouts, but this isn't a bailout, it's a strategic pivot that could redefine the global economy by 2030. Today, we perform an autopsy on the new Intel. To understand the present, we have to look at the numbers most people missed. Look at this net margin, 0.37%. For a semiconductor giant, that's a heart attack on paper. Intel was bleeding cash to build its 18A process. In the sector, we call this CapEx hell. They weren't just making chips, they were betting the entire company's balance sheet on a manufacturing process that hadn't even launched yet. But here's the professional insight. While the retail investors were selling because of negative ROE, the institutional smart money was looking at the debt-to-equity ratio of 0.38. Intel was surprisingly lean for a company in a crisis. Why would NVIDIA buy a piece of Intel? 2 words: supply chain. In 2026, relying solely on TSMC is a geopolitical risk no CEO can ignore. By investing in Intel's foundry, NVIDIA isn't just buying a competitor, they're buying an insurance policy. At CES this week, we saw the Panther Lake chips. This is the first time Intel's 18A process has been shown to the world. If the yields are high, Intel becomes the only Western company capable of competing with Taiwan. That is the $200 billion gamble. So, is Intel a buy or a trap? My professional take? Execution risk is still the elephant in the room. Delivering the volume needed to satisfy NVIDIA and the PC market is a mountain Intel hasn't climbed in a decade. If they stumble on the 18A ramp, this recovery story ends. But if they succeed, we're looking at the birth of the most powerful foundry design hybrid in history. The markets are moving faster than ever. If you want to see more autopsies on the companies shaping our future, subscribe. And remember, I work in finance, but I'm not your advisor. Do your own due diligence. This is Capital Forensic, signing off.